Greetings, traders, and thank you for joining with me today. Today we have our presentation, which is a bi-weekly presentation on Boomerang Day Trader and the general markets on how to work with Boomerang Trader and understand the markets and things like that. Before we get started, please read the disclosure here and understand the disclosure, which is posted on the bottom of our Boomerang Day Trader site. You can read it there in full, but it's just important to know that you should only trade with risk capital that you have available over and beyond your regular expenses, and try to understand that futures trading generally is for traders that are well off and they have plenty of money that they can use in the markets to support their positions and trade with. Also, understand that what I'm going to be showing you today, these are not live trades, but these are hypothetical trades in the sense that what I show you in these webinars are exactly where the boomerang setups occurred and where the pullbacks to the sig line occurred and things like that. We'll go over that more in a minute, but try to understand also it's very important that just because it's not a live trade, it's still very valid because the boomerang system is very fixed mechanical system. In other words, the rules are the rules. So with that in mind, while we're here on this page, by the way, and I'll be going over all this in a second, but anything you need to know about Boomerang, updates and everything are all available here on the default. This is the default place to go, boomerangtrader.com, and you will find here lots of great information, especially in the resource section. And now the blog section is where I post all the announcements about the webinar, like for example here today. And this is where you can keep in touch with all the past recorded sessions. Usually when I'm done recording this like today, I'll set that up on YouTube and post it here on the blog, so you can go back over all the different webinars we've done in the past. So there's a wonderful archive there, and the real key ones, and this is important, I've isolated the really key webinars that talk about specific things such as trading on the right side of the market force, in other words the boomerang indicators that are in the system. Also some of the audit sessions I've done, like on crude oil here, showing 97% winning trade setups. The trend trading method, and something we should all know about is how to manage congested areas and whipsaw. We've had tons of that the last few weeks going into this slow August period, and I'll get into that in a second as well. And primarily too, this is very important, using the boomerang bunker method in the US stock indexes in particular when things just get way too crazy and whipsaw and stuck up in the markets and all that, and I'll talk about that in a few seconds here. So just keep that in mind. Here's our core method for trading Boomerang Day Trader, and this applies to the US stock indexes, whereas for the crude oil the exact method is a little slightly different, and that's described here on the successful crude oil trading with Boomerang Day Trader. So with that in mind, I've got a crude oil chart up here now. What I'd like to do as we get started here, and if you can just please hold your questions, and I'll be more than happy to get back to those at a specific time in the near future. And by the way, thank you very much, Charlie, for your report there on good audio and video. That's appreciated because that saves me having to ask. So we're all set to go. You should be able to see my cursor moving here and hear me okay. If not, just go ahead and type a message there in the question and answer section. All right, so here's the thing. Boomerang Day Trader is a really, really effective system. It's been that way for a long time, and I refined it recently, about a year and a half ago, to where it is so accurate that we actually guarantee 90% winning trade setups. Now, what's the difference there? The difference is we're going to guarantee that the Boomerang software is going to produce 97% in crude oil, 90% plus winning trade setups in the market. Now that doesn't guarantee you're going to catch all the setups. That doesn't guarantee that you're not going to be half asleep because you didn't get enough sleep the night before, that doesn't guarantee that you're upset about something in your life. You know, your favorite dog died or something, or you had a little more serious note. You had a relationship with your family that had a problem. You know, you shouldn't trade under those conditions. And we're going to talk about some of that stuff today before we get into all the mechanics of the system, because it's as important as actual mechanics of the trading system. So just keep that in mind, that we guarantee that the system will produce 90% winning trades on, particularly on the mini NASDAQ contract on the US stock index, symbol NQ, and on crude oil is incredibly high ratio winning trades. Crude oil is actually a smoother contract to trade, and it's not correlated necessarily with the US stock market, which is very decisively and very carefully rigged by the Federal Reserve. And there are other central banks around the world that rig their markets, but I'm telling you, it's something that is so vital to trading that you should know. So a lot of times, such as the last couple weeks, and especially the entire month of August practically, which is August, you have to know this, and you should remember this for next year and the following year and ongoing. Summertime's a little bit different of an animal. A lot of the big traders start taking off, but particularly in August, it's a really well-known month for a lot of the big hedge fund managers and people like that to take off for the entire month. Now, and they don't even come back until what we saw on Tuesday. They don't even come back until after Labor Day. So just keep that in mind. Don't expect the market to be the same as the rest of the year. We're now in the first week, kind of the back to work week, and so we're going to be watching for the ranges to open up and everything. That's another thing that's important, is keep an eye on the ranges. If the ranges are tight and compacted, much more than the normal average, you're going to get you're going to find that the markets are going to be choppier. There's going to be more whipsaw, and you may get less swing in the less trades, I should say, on the U.S. stock indexes. What's exciting is that since I've introduced crude oil, which has always been available for trading on Boomerang, but since I've really been reviewing it a lot, doing audits on the trade setups and everything, you will find that mini NASDAQ and crude oil are the two absolute best contracts to trade with Boomerang. Although Boomerang works really good on any active futures contract, stock, or ETF, those two in particular are highly recommended by me for you to use as two non-correlated trading assets. What I mean by non-correlated is that if the U.S. stock market is just off the charts full of whipsaw and wild swings, and you're maybe not getting as many confirmed Boomerang setups because of that, and the ranges are all tightened up as they have been lately, just switch over to crude oil and you'll find you'll get just as many trades as you do most of the time year round. Sure, there may be some slower periods, but generally you'll find in crude oil that it's active every day and you'll get these 10 tick type of trades. Now, we don't use the ES contract. The ES contract, I don't think, is as good at all for day trading as it used to be. It's the largest contract for the U.S. stock indexes, but the problem is there's also a lot of big hedge fund managers and everything in there putting on positions that have nothing to do with day trading. They are hedging their accounts, or they're doing counter trades for different reasons. Maybe they're even trying to push the market up so they can get a better position on the other side. Now, they have to do that very carefully, because if they do it blatantly, that's called spoofing, and it's against Rule 565 of the exchange, and they can get fined. But still, just keep that in mind, that there's some very tricky fellows out there and gals too that manage a lot of big money, and you just want to have in your arsenal crude oil and the NQ. You can practice on crude oil on your simulator. You should be able to get that contract from your broker to be set up to trade on Boomerang Day Trader. And then you can practice in simulation for a while. And then as you see, I'm going to go over that today, exactly what the method is for that. But highly recommended that you use that for, use those two contracts, and you'll always have a job to go to every day, and you'll have some great potential income from that. So, with that in mind, again, later we will have questions. If you have questions that come up, feel free to type them in there. I'll go back and scroll over those later in about, another half an hour. I'll be doing this initial presentation about a half an hour, and then we'll go over the questions and everything. So, that's important to understand. August, we've just come out of a really slow period. I finally got a week off. I actually took a whole week off, which I haven't done in 2 years. I usually just take the vacations from the market periods. And boy, it was quite pleasant. But you know what? I was studying charts a lot the whole time. Not because I had to, because that's what I love. I love this business. And I was busy researching new ideas and everything. I'm always doing that. I'm always asking myself, is Boomerang the most cutting edge system out there? And sometimes I look around and I look at what else is out there. There's so many different things out there, and I'm sure you get a lot of emails about them. And I'm telling you right now, any systems you're looking at or anything you look at it or something that comes in the mail and you go, oh, that's interesting, and check it out, just ask yourself, do these people guarantee 90% winning trades from their system or their book or their course or whatever it is? And if you email and ask them, they'll come back at you and go, what? Are you crazy? Nobody does that. And then you'll know where to go. Boomerang Day Trader does. That's how much confidence I have in this. But even still, I'm always researching how to make it as cutting edge as possible. And that's why we do these free bi-weekly webinars. I want you to make sure and have constantly updated information about every aspect of trading that will affect you in making profits, which is what I want you to do. We both win if that happens. So with that in mind, just keep that note on your desk or something. Here's what it is. Every day in the markets are different. There are a lot of reoccurring patterns. Obviously, Boomerang, I've developed and built into the system reoccurring patterns that are very, very highly successful and accurate. But every day in the markets is a little bit different. Every day in the markets is a little different. Every hour in the markets is a little bit different than the last one because there's all this news and events coming in. And actually, in what I do in my live trading room, I'm micro scalping. I'm not using exactly the Boomerang method for trading in my room because I'm trying to get out of the market within the first couple hours. And a lot of times, successful Boomerang trades may be an hour between each trade, which is not a problem. If you're just sitting there trading, you're going to make you go to work and you know over the next 5-6 hours you're going to have at least 4, 5, 6 successful trades. That's a great paycheck, and it beats sitting at the office. You got your nice pet there next to you, and you can talk to your wife, or if your kids are around, you can talk to them a little bit, and you know what I'm saying. But for the highly active room that I run every day, which also includes stocks and ETFs and things like that I recommend, we're working off, I mean, literally that every 10 to 15 minutes in the market is a little bit different than the other in the U.S. stock indexes. And so just keep that in mind, but it's also the same with trading Boomerang. So with that in mind, I want you to remind you that again on the blog, what I'm going to show you right now for trading with crude oil, because most of you have seen the blogs posts, and you can certainly see those as I mentioned here on the blog site under the blog area. But the crude oil method for trading is just slightly different. I'm going to show you that right now. And you'll have this recording, but also it's recorded right here on this particular post, which again is under the resource section. Now again, it's very important. If you're going to trade the U.S. stock indexes and the mini NAS or others, that say you're going to try to trade the TF, the ES, or the YM, those are the three U.S. stock indexes you can trade with. Now the TF's on a different exchange, but you can still get that too. I'm just telling you, I highly recommend mini NAS. If you get really good at mini NAS, you'll get a lot of great trades. They're pretty smooth on Boomerang, especially now we get back into this September, October, November period. It's going to be really nice. Not as choppy as November was. So with crude oil, I just got a chart here. This is a crude oil chart. Just kind of randomly grabbed one here. Let's find some trades in here that you can note. The way it works with crude oil is that it's the exact same method almost as with the U.S. stock index, except as you know, most of you know, or should know, that with the U.S. stock indexes, what we're going to be doing is waiting for the spread on the dynamic trend bands to be a point and a half tighter or less in order to take a trade. Now, with crude oil, we don't do that. With crude oil, you either have a crossover exactly, or you have the dynamic trend bands matching color. Let's see, where am I in this chart? Let me go back about 13, 14 sessions. We'll just go through a bunch of the trades and I'll show you. Now, crude oil, this is a West Coast chart. Crude oil gets going about 5:30 on the West Coast to 6 o'clock. Actually opens, I believe, at 6. But I'm always trading it just slightly in pre-market too, so you can do it either way. But the rules for, just like for Boomerang, for crude oil, the same, is that if all of the, what you're looking for is a matching dynamic trend band colors and a pullback to the signal line, or an exact crossover, one or the other. Now, the other auxiliary rule, which is the same for the stock indexes for mini NAS, is that if a trade channel opens and all the pullbacks to the signal line are used up before you actually get a crossover, you can also trade a pullback to the Cobra on the crossover. Now, that looks pretty simple here because there's the pullback to the Cobra right there, 47.18. They went down to 47.13, and then they shot up to 47.34. Now, on crude oil, we are looking to scalp in general for 10 ticks, but I say 8 to 10 because that way, if you got a little slippage, just keep your eye on the 8 to 10 tick mark, and that's going to put 80 to $100 in your pocket per contract that you're trading. So that's all there is really to crude oil. I know that sounds very simple, but that's really all there is. And Boomerang is designed to hand you 95% plus winning trades on crude oil. I'll show you right here. Now, the stop, by the way, is 13 ticks. So you're using an average of a 10 tick gain and a 13 tick stop, and they hardly ever get stopped out. So your risk is pretty low if you get really good at trading crude oil and you just know those last two rules I gave you, which is really, again, matching dynamic trend bands and or a crossover in a trade channel on that side. So here's a bluish color, the buy color for the dynamic trend band number 1. Here's a blue color in number 2. So right here, as they're crossing over, they're matching color. But all of the trade channels started way over here, and all the pullbacks to the signal line, all 6 of them here, have occurred before the actual crossover. So if that occurs, and then you get a crossover, you can trade a pullback to the Cobra. So there's the first winning trade there for 10 ticks. You see that? Now, it applies to any level. So there's no really second level trades or third levels like with the stock indexes. We take second level trades in the stock indexes, but not third or fourth. But with crude oil, it's pretty much if you get if you have matching dynamic trend bands, like right here is a matching dynamic trend band. This is amazing here how the trade channel opened. On this pullback right here, as the price were moving up, both the trend bands matched. You buy that pullback to the signal line there, and the thing just shot straight up to the moon. You could have even bought this one right here, because you can see 51 shot up to 64 here. Now, technically though, if you miss this one, this kind of big spike like this is going to create a fat channel, and the fat channel rules still apply. They're a little more lenient with crude oil, but generally you don't want to trade against a fat channel. Not so much a configuration like this, but one where there's truly been more of a flat and a big bubble. I'll show you. I'm sure we'll find one anytime here. So there's 2 winning trades in a row there on this particular day. This is, by the way, this is 8/24. Now here's the market coming in here. The crossover has occurred. Here's a new sell channel. Here's a pullback to the signal line right here at 47.50, and the prices run up to 59. So you had some pressure against the trade, 9 ticks against you, but that's okay, because all you're looking for here is a move for you're looking for 13 ticks stop, and here's 50, and then 50 just collapses down here all the way to 13. So you clearly got 10 ticks out of this trade here. That's the third winning trade in the row. And there's nothing over here because this is, if you read my article here, study this video on managing whipsaw, how to manage congested areas in whipsaw. You can read that later. I won't go over it in super detail here. That's why I have posted this special section with the auxiliary videos so you can study these on your spare time. But when you get a red candle, then a green candle, then another red candle, then a green candle next to it, a sell channel with a yellow dot on it, a counter buy channel with a blue dot, another, that's just whipsaw occurring in the market. The market's flipping out. It's going each way. Here's another sell channel with a yellow dot and a blue, it's just flipping out. Just let it go until once you see that crossover in the matching dynamic trend bands, then you'll have a safe entry. Now here again, they put some pressure on the trade, but it didn't hit 13 ticks. And trading crude's a little bit more pleasant than the U.S. stock indexes in the sense that the ratio of winning trades is higher than 90%, and you're looking for an average of a 10 tick gain and a 13 tick stop. So if it gets stopped out, it's not that painful, and it's very rare. So here you have a crossover, but you don't really have, it's one of these big steep moves to the downside. You got a crossover, but not something you really want to get too worked up about trading them right here, because the downside is still sloping down pretty intensely. But if you notice here, when the sell channel comes back in, right here, they're all matching colors again. And at 47.01 or this 4700, they drop right down to 84s for 10 ticks. Most of these crude oil trades are going to happen real quick, which is always quite pleasant, isn't it? You get in a boomerang trade and 40 seconds later, boom, it hits your profit gain. That's quite exciting, quite pleasant. My record before with Boomerang is 8 seconds. We've had a bunch of 12-second trades. This is in some faster markets that were occurring about 6 months ago. They haven't had a lot of those lately, but I don't expect that. A lot of 30-second trades, 1 minute, 2 minutes is normal for a lot of boomerangs, but a lot of times you got to just sit in the trade and wait it out. But for crude oil, watch for the matching dynamic trend bands. Now again, here's a crossover. Prices shot up. Here's a pullback to the signal line with the matching dynamic trend bands at 82. And 82 shoots up to 93, just eking out 11 ticks there. So within that, you had your 10 ticks. Just trade these crude oil trades with a lot of confidence, but make sure and practice first on the simulator. Get as much physical working out with it. It's just like going to the gym. If you're going to go run a marathon, or you're going to take a marathon bike ride for a couple miles, you got to go to the gym and work out a little bit first, or at least stretch out at home for an hour and do some calisthenics and things. That's just common sense. Well, the same with trading. Don't just open your chart and go into the market with your head filled with all kinds of stuff left over from the evening or whatever and just start trading, but make sure and get worked up into it. Maybe sim trade for an hour before the market opens. Get yourself all warmed up. I do it every day. When I trade, I usually take a paper trade or two when I first start trading, just to get a feel for the whipsaw level and all that. Again, with crude oil, it's a lot smoother contracts, so you may not have to do that. Here's a sell channel. Here's a pullback to the signal line, and down they go for 10 ticks. I'll speed up a little bit here. Here's a buy channel. Here's the crossover right here. The dynamic trend bands are matching. Here's the pullback, which is marked by this blue dot. And a quick note on that. I've had traders say they're a little bit lazy and they don't study Boomerang. They don't watch the videos and learn the method, but they're real quick to want to, kind of make smart aleck comments. Oh, well, this is not a live trading, so you're like making this up. And my answer to that is, first of all, why don't you study Boomerang and what I'm teaching first before you make a comment? To do that, you're just showing that you're kind of ignorant and you're not really a serious trader. Trading requires a lot of study, Boomerang's very simple, but you got to at least learn the method first. Well, Boomerang is programmed that it will only print a blue dot on a signal line if the signal line is hit. If it's not hit, it won't print it. And if it prints it there, it'll be on there for forever. I mean, you could go back 6 months, a year, and you'll see this dot here. Mid June next year, you can still find this dot here in this chart if you've saved that data. So it hit that. And if the prices went 13 ticks against this trade, they're going to be down here. The prices would have moved down here, 67. So they would have moved down here to, they would have had to go down here to around 54 to stop that trade out, somewhere around here. You see what I'm saying? And it's clearly not there. So these are just as valid, because what I'm training traders who buy Boomerang here is the trade setups. You got to get into the learning how to use the trade setups, and then you get into them and you'll make the money. So then the market went very choppy here at this point, but you can still see here's a sell channel. Here's the crossover right here. Here's a pullback to the signal line right at the crossover, that's valid for Boomerang as long as you have dynamic trend band number 1 is bearish, the bearish color, the sell color, the reddish magenta color. You have a sell channel, and they're right on the verge of the crossover, or have crossed over, or matching colors. So you could have shorted it right here at 71, and 71 came right down to 60. 11 ticks. So the setups are there, the profits are there, you just have to know how to use the method. Here's a buy channel here. Even though things are flat, which means a riskier trade. I mean, if you get a flat dynamic trend band, generally the rule of Boomerang is to not trade against a flat dynamic trend band. But you can see right here, here's a buy channel. The dynamic trend bands are matching color right on this pullback to the signal line here at 73. Let me open this up so you can make sure. I always open my charts wide up. I go to these webinars and videos on trader sites because I check everything out. It's kind of a hobby of mine. And they got these scrunched up charts, and I go, they're telling you, okay, we bought them here. And I'm going, where? It's just a bunch of scrunched up charts. Anyway, look here. So here's the first pullback with the matching dynamic trend. You can't quite see, but there's a blue dot right here. 71 jumped up to 81. You see that? 10 ticks exactly. So you would have probably had to scalp that, or maybe just scalp 8 out of there if they backed off. Or you can set your meter for 8 ticks or 9 ticks. I mean this meter over here. You see this? I've got a little library of setups. Plus this ticks, plus 12, minus 10. Usually what I do when I'm trading is I use plus 20, minus 20, and then I grab and drag the brackets that go out there when you put on a trade. But I got a little library here, and you can build those. It shows you here on Ninja Trader. They have a special video library that shows you how to build that on the ATM strategy, which you can do, or you can email me and I can send you a link for that. It's very simple to do. But the point is you can put on here, 13 ticks, your stop, minus 13, plus 9. In other words, rather than 10, you can build it to take plus 8 ticks, or plus 10, plus 9. One of those, or build all 3 of those. And just if the market's really volatile and moving around, you got good volume, then set it for 10 ticks. Now, here's another example here. Market shot down lower. Now, this is a higher risk trade, but let's see what happened. I don't know. I'll have to see. Here's the pullback, the sig line, which occurred at 67. 67 shot up to 79. So it actually, 78. You see that? 67 shot up to 78. So it actually held a 13 tick stop. Even got a counter buy channel, which is a little crazy. And then they came shooting down, and 67 ended up coming down to 57 for 10 ticks. So I've carefully measured this, tested it, traded with it, planned it out. The method I'm giving you is very, very, very good for capturing 10 tick moves, and they occur all day long. You can get them going all day long on Boomerang with crude oil. Here's another example of matching dynamic trend bands here. See this? Later in the afternoon, You got the sell channel up here, but there's no trade until they're matching colors or have crossed over. Well, here they are matching colors. You go short at 76, and look at that, no pressure on the entry. Boom, down they go. 10 ticks. I don't know how many that was so far today. Markets closed at that point, but I think there was like 6 or 7 winning trades, and you notice that we didn't have any that got stopped out. And again, trading live is different in the sense that these prices are flipping around all over, but you have an exact, crystal clear mechanical method. There's no way that if you're doing it wrong, that's a whole different story. If you're not trading the method and you're getting stopped out or whatever, that's a whole different story. But that's not Boomerang's fault. That's you're not coming to these webinars enough and learning how the method works. And we invite you to come. I have these every 2 weeks, except I took last week, I think, was off because I was on vacation, and hey, it was August. Let's let the thing ride a little bit here. Anyway, so let's look at the next day. And I'm just going over these crude examples. In about 15 minutes, I'll wrap it up and we'll go into your question and answers. And I can go over some of the stock indexes too, the mini NAS if you want, but really I'm just trying to focus on crude here today because I really, really want to encourage all Boomerang users to start trading with crude and get it in your arsenal, because when these riggers, these market riggers, these Federal Reserve clowns, and now I was talking about this stuff since 2001 when I started my services here in the trading industry, and here it is 15 years later, and now all the big hedge fund managers, you can see articles every day on CNBC talking about the riggers and the Federal Reserve and how they've been rigging the markets, and now they're running out of bullets. All kinds of articles like that by these billion-dollar hedge fund traders like Jeffrey Gundlach and the ex-PIMCO Bill, I forget his name, Bill. I really admire his articles. They come out too. He has a different group he works with now. Bill Gross, Jeffrey Gundlach, Bill Gross. These guys know what they're talking about, and they write articles like this all the time. Plus a lot of others now. I've been seeing them all over the place. So keep that in mind. If things get too crazy on mini NASDAQ and just too much whipsaw and you're not getting enough trades, just get really experienced with crude oil and just roll over to crude oil on those days. Keep a crude oil chart up and say, oh, I'm sitting here in NAS and nothing's happening. Just go over to crude oil. So there's a crude oil trade sitting up. Boom, grab it. So here's the market opening up here. Very choppy, bunch of whipsaw. They're opening up, no big deal. Well, all of a sudden, you get a buy chance. See, there's no matching DTBs in here. Everything's just like, spotty colors. Well, here's a new buy channel. The dynamic trend bands now are solidly matching color. Here's a pullback to the signal line at 67, and it shoots right up instantly to 79 for 10 ticks. Here's matching dynamic trend bands on a flatter one. This one might get stopped out here. They are crossing over and matching right here at 60. 60 runs up to 67, pulls back 57, and then shoots up and stops it out. Now here's a stop out one here. Now again, this the one thing I can say is this is a very flat dynamic trend band here, so you might have passed on that trade. You generally want to see, you see how the dynamic trend band number 2 and 1 are both flat on each other here. Generally those trades should not be taken. They're riskier. But let's say we got stopped out on it. So what? We have a one winner, one stop out, and here's a new buy channel. Here's a pullback signal line. I'm going to speed up a little bit here. Here's 10 ticks rolling up here. Here's a sell channel, no trade there. Here's a counter buy channel, a pullback the signal line, 10 ticks rolling up here. Here's a crossover coming in here, no matching color on the DTBs, but right here, you see that? They're crossing right here on this candle. So you go short here, there's 10 ticks there. So you see, even if we consider this one having gotten stopped out, which again, as you get to know Boomerang, one of our rules, it's been like that since we started Boomerang 6 years ago. Trading against the flat dynamic trend bands where they're both flat especially is not a good idea. Well, even if you say, okay, that one got stopped out, we just had 1, 2, three winners right after that, and more to come. Now, here is an example of a trade where let's measure it first. Matching dynamic trend bands, pull back the signal line 91, comes right down to 83. There's your 8-tick type trade on this one. However, you get a configuration like this where the market gets crunched to the downside, whipsaws back, and then starts moving lower and forms another sell channel. Your odds in this trade are a lot lower. If you're ranking your trades in your mind like straight boomerang trades as being like 8 to 10s, this is like, to me, this is like a 5. It's a much higher risk trade. Even though it did pan out for 8 ticks, you're at the tail end of a big giant move with a bunch of whipsaw, and then in the midst of the whipsaw, it whipsaws into a sell channel. And yes, the dynamic trend bands are matching, but it just takes a little common sense and experience with Boomerang to not just say, well, the bands are matching. Well, I know. And it still produce an 8-tick move. If you got to get into this for whatever reason, just take 5 ticks or 7 or 8. Just try to be a little more conservative. Nothing wrong with that. And again, thank you for your questions, Chris and Steve, William. I'm going to go over all those in great detail. In fact, that's going to be the majority of the webinar today because I don't have a time limit, whereas I like to keep these initial presentation a little bit shorter and crisper so I can get it recorded nicely on YouTube without the trade getting too large, or the movie getting too large and a little fuzzy on Ninja or on YouTube. Anyway, so here, say you took this, you grabbed a few ticks, now you're watching for the next trade. Well, there's no crossover or matching color until you get to this pullback here, but that's part of the system. So you buy this pullback, 3 jumps up to 13, 10 ticks. You see that? Now, on the stock index, you might have perceived these candles whipsawing up and forming a fat channel. I know, but on crude, it's a little different. Crude just has an amazing, powerful, trending ability within it. I mean, it gets choppy and stuff like that, but boy, when these boomerang trades set up and the dynamic trend bands match across over, there's a lot of force running that crude oil up, and they just fly with the trade. It's quite pleasant. Here again, you don't have matching dynamic trend bands or a crossover. The crossover is way down here, and no matching dynamic trend bands here. And again, though, one of our rules, if this hadn't run so much, and it mostly applies to brand new channels opening up, and that is if you've used up the pullbacks to signal line without a trade, without matching dynamic trend bands and everything, you can trade a pullback to the Cobra. But in this case, and again, you'll learn this as you work with Boomerang, you come to these webinars, you'll remember this, you'll take notes, and you'll say, oh yeah, this is just an already ran trade. You see what I'm saying? The 6 dots got used up, but it was already within the channel, and it didn't happen. You just don't have the crossover, and by the time they're running way down here, trying to trade a pullback to Cobra is going to be a little bit difficult. Now, let's just check for fun what they did. 99 pulled back to 94, but again, it's not the correct setup. And especially seeing a big whipsaw candle like this, you're not going to want to take that. You'll just wait for the next trade. And here it comes here as the new buy channel open. With crude oil especially, a lot of trades occur, so you can just wait around, and there's one right around the corner. If you missed one, it's no big deal. Here's a buy channel. And notice again right here on this candle or this one, that's where the dynamic trend bands are matching color. They haven't crossed over till up here, but as long as they're matching colors or have just gotten ready to cross over, obviously with the same channel, but that's always going to be there. You buy the pullback, the signal line at 6, and 6 runs up to 14. So this is an 8-tick move here. The first crossover was down here at 4. You see that? 4 was actually where the first pullback occurred, where they were matching colors. So 4 did run up indeed to 14 for exactly 10 ticks. If you got in a little later at this one, well, just what you would have done or what I would have done, I would have, say I got in this one right here a little late, I would have went to this one and said, well, where's 10 ticks off this one? I would have said 14 was 10 ticks. So when this one jumped up to 14, I would have probably clipped it on a move up there, knowing that this first one, maybe I didn't quite see it here. I was just, this trading is so fast, that I might have for some reason missed it, but I would have measured the 10 ticks from there just to be careful. You see, and they made another jump up there, so you had a chance to grab at least 6 to 8 to 9 ticks out of this deal. Here they are again, and now here you got a quicker crossover, but the dynamic trend bands, here's a sell channel. They were actually almost matching color right on this, but you wouldn't have got this one in most cases. You would have just traded this one, and there's 10 ticks there. You notice all winners, except arguably that one where the dynamic trend bands were flat, and that technically was not a correct trade setup. But look at that. Here's another winner here. Buy channel, matching dynamic trend bands, pull back to the signal line, and up they go for 10 ticks. Much higher than 10 ticks. 4703 ran to 40 ticks. But don't worry about that. If you get really good at taking 10 ticks, that means you can put on more contracts and you get that easy money, what I call the easy money. I like that easy money because you get out of the market quicker, you get the risk out of the way, it's exhilarating, and if you just get really, really good at catching the easy money, the easier money, let's say, trying to hold for the big move is all right, and we have methods for doing that, but in general, just be really happy if you can catch the 10 tick moves. Now again, the method that we have for catching trend trades is explained on the blog on the website right here. I'll show it to you. So rather than me spend the time doing it again now and going over that, right here, Boomerang Trend Trading Method, there's a video just like me talking now which goes only and exactly and specifically into the Boomerang Trend Trading Method. It's going to add several trades to your arsenal, usually at least 1 to 2 a day. But if you multiply that out by, say, 20 trading days, that's 40 extra trades. Do you see that? Say you get 2 trend trading trade setups a day. You scalp 3 points on the, as an example, on mini NAS. You got 40 extra trades a month times 3 points. That's 120 extra points times 20 bucks. That's extra 2,400 bucks. See what I mean? That's enough to pay your mortgage. Well, almost. Depends on how big your house is, I suppose. So here, again, another example. Nothing here. Sell channel. Pullback signal line, 10 ticks. This is a new day. Buy channel. Nothing here. Now here's a good example here of where this exact example, the market didn't pull back the signal line. Therefore, it's not getting a blue dot on it. Had it historically hit that pull back the signal line where you would have traded, there would be a blue dot printed here. Has nothing to do whether this chart is live or still. If it hit the signal line in real time at the time of the trade, it would have printed here. And that gives us the ability to have these webinars and do them on still chart because the market's closed anyway. I can't do it live anyway. But it gives me the chance to show you on the still charts. You learn and condition yourself to follow the exact system and you'll get the same amount of winning trades. So there was no pullbacks to signal line, but the rule, and you may remember it because I mentioned it earlier, if there's no pullbacks to the signal line where the system authorizes a trade, but then you get the crossover dynamic trend bands, you can trade a pullback to the Cobra. Now, for those of you who are new that I maybe forgot to mention this, sorry about that. I'm so used to having a lot of our members already coming on every week, but this is the Cobra here that runs through here. You have the dynamic trend band number 1, the dynamic trend band number 2, which is a thicker solid line, and then the Cobra tends to front run both those. See the Cobra right here is turning green, whereas these are just starting to come on board. And now that it's green and then it's crossing over dynamic trend number 2, the market's already moving. But it's a very valuable tool for the trend trading method and for this auxiliary setup where if you don't get a pullback the signal line within usually like I like to say 3 to 5 candles. You don't want to, it doesn't apply to the market that's moved 5, 6, 7, 8 candles higher or lower, but I'm away from it. But right here is the crossover in this candle. So you go 1, 2, 3. There's a tap on the Cobra and number 4. So within here you can buy the Cobra and it shoots up for 10 ticks. The Cobra price is 44 and they ran up to 70 in a big spike up move. No pressure on the stop. You just get long there based on there were no pullbacks to the signal line. We did have a crossover and up they go. The dynamic trend band crossovers are so powerful that that's why we use that now as the virtually only reason to get in a trade is using the dynamic trend bands. I developed these after so many years of research and then live testing them, retesting them, reconfiguring. It was a lot of work, but they're very good. Okay, now here's a crossover right here. This is mid-morning. Here's a crossover, a pullback to the signal line right here at 28, which drops down to 17. But if you missed that because it happened right on the pullback line, but you would have been watching for it, I know, because you're paying attention here in my webinar. It's not too slow moving. Now, if you got in late here, this trade would have got stopped out. 24 dropped down to 18, which is only 6 ticks, and then it shot up against you here. 24 shot up to 30. It would have stopped it out up in this big spike candle here. But that's all right because here comes another sell, counter sell channel. There's no buy trade here. Here comes another sell channel. Here's a pullback signal line. 27 moves up to 31 and comes right down for 10 ticks. So yeah, you got stopped out here, but you got your ticks back right here on this trade, and as you wait for the next trade, you'll get some more. So here's a new buy channel. Now again, this is exactly what I'm saying. There's a crossover coming in right here. All the pullbacks to the signal line were used up before there was a crossover, and right on the crossover there's a pullback to the Cobra right here at 78, and 78 shoots up to 96. See how that works? That's an auxiliary trade if you don't get a pullback to the signal line with the dynamic trend bands crossing over or mentioning. As long as they're touching here and crossing over, you can grab that trade. Here again, a sell channel, matching color on the dynamic trend bands, a pullback to the signal line, and 63 drops down to 48. The trend trading method, I'll show you that now, it works for crude oil too, is when you have dynamic trend band number 1 cross, in the case of a sell trend down move, under the Cobra, that's Boomerang telling you a stronger move is possibly pending, or in most cases will be. So when they cross over the dynamic trend band number 1, which is this dash dot line, crosses under, blow this up a little, under the Cobra right here in this candle, you trade a pullback to the Cobra. Here they are coming in here and you go, oh, looks like a trend trade, and then on this candle it moved up and then it kind of popped down and you got the crossover and you just hit them right at the Cobra, which was at 60, and 60 drops down to 48. So there's another 10 ticks. You see that? And again, it's explained here on this video in more detail with a lot of examples on the mini NAS, but I'm showing one here on crude oil. So you have the crossover, you have the matching dynamic trend bands, you have the method where if the crossover occurs and all the 6 pullbacks the signal line were used up without being a correct trade setup, you can trade the Cobra within 3 to 5 candles from the crossover, and you have the trend trading method. That's it. That's all there is. The rest is just using those and making money. Here's a buy channel, mid-morning here, or later morning. in New York, crude oil is going around. No matching colors, but right here is a crossover. You see that? So right here on the crossover, you kind of have a choice in this one here. You can either trade the Cobra or just buy this pullback, the SIG line right here. 33 shoots up to 47 for 10 ticks. No trade here. No crossover, no matching colors on the DTBs. Actually, a lot of whipsaw coming in here. Red candle, green candle, blue dot, yellow dot, buy channel, sell channel. That's not anything wrong with Boomerang. That's Boomerang actually telling you loud and clear, stand aside until you get matching dynamic trend bands. When you get whipsaw, the first thing you should think is, first of all, for God's sakes, don't be like all the amateurs out there. I got to figure this out. I got to get in. For God's sakes, stand aside. That's what Boomerang right here. These matching or counter colored candles and dots. Boomerang saying, stand aside and wait for matching dynamic trend bands. In other words, wait for a new channel where the dynamic trend bands match. Don't try to trade in this or figure it out. Just wait. So here comes a new channel, and it's still not matching. And now they shoot up. Now they're matching. A pull back the SIG line, and there's 10 ticks. And that's later in the session that occurred. Then they had big giant sell-off in crude oil. Remember that? That was a few days ago. That's on this chart here that we're in, or a week ago or something. Big crude oils went down to 44. They're trading 46.10 right now as we speak on the crude. So still going here. So crude oil trades around the clock more or less, but you want to just trade the regular hours always in any contract, because you want as much participation volume as you can. You know, don't mess yourself up. Again, here, matching dynamic trend bands. I'll speed up and then we'll end this part of the webinar and go into your Q&A session where you can ask anything you want. I can go into any chart or any setup you want. Now here's a winning trade there. No dynamic trend bands or matching color here, are they? Here's a sell channel. Here's a matching colors at 77, drops down to 68. So, you know, it's that 8 to 10 tick rule here. We have to be a little careful if you're at the bottom of this and it's all whipsawing. Just this is the exact thing we saw earlier. Market made a big move down, goes into whipsaw mode, and then it makes another second level sell channel. You can trade it, but just plan on scalping out 6 to 8 ticks on these instead of trying to go for 10. Here's a crossover, matching dynamic trend bands. Right, well, here's a crossover right here. Pull back the SIG line, occurs at 87, and they shoot up to 93. So this one had a problem here. And when they collapsed in here, you got 85, came down to 76. Actually, believe it or not, you got long on the crossover on this here. On 86, they came down to 76, which is a 10 tick loss, but the tick for gain is 13. So actually, although it was kind of creepy, 85 ran up to 92 again. And if you survived this and didn't freak out and you held in the trade, when they finally leaped back up again, you're long at 86 or 85 and they leap back up. Now you might want to just get out with that was a 7 tick max gain there. Just get out. Had you held, they still held that 13 tick stop. It's kind of important to note this because this is a little bit crazy whipsaw, but had you got in this trade and were brave enough to hold through all this, it still held 13 ticks, and then 85 ended up blasting up, looks like almost 20 ticks higher here, 18 ticks higher. Then over here, another trade set up. Notice that, matching dynamic trend bands. Down they go for 10 ticks. I'm almost done here. Matching dynamic trend bands here, but a little bit of a questionable trade, because this is one of these, what I was talking about earlier, like a flat channel that forms a big bubble, a fat channel. Like the rule for the fat channel still applies for crude oil, but generally, It's not in a trending type market setup like something, I had one earlier, but I mentioned that before. This is more of a flat channel. See the dynamic trend band and everything, and then it rallies up and forms a bubble. Had you caught this one, which you might have, 82 jumped up as high as 89, but it was still, but once again, and that's the power of the system, because I went through so many trading setups and things over the years of developing this on the crude oil, that you can see that even if you got long at 82 here or even 84, it still held a 13 tick stop here amidst all this madness, and 84 still ended up running up here to 93 finally and saved your life. You could have got out somewhere along here with 5, 6, 7, 8 ticks, whatever. Once you realize, whoa, we're in whipsaw, but I'm still holding the stop. And that's the power of the method. Here's buy channel. This one's easy. Just pull back signal line. Everything's matching and crossing over, and up they go. And that ended that session. So I'll end the session on this for now. I just wanted to show you those crude oil exam. Now you saw that there was, out of all those sessions and all those winning trades, there was maybe one or two that got stopped out. Arguably, the very first one I showed you on the flat dynamic trend bands probably wouldn't have been taken. Anyway, now I'll be more than happy to go into your questions, and if there's some questions in here in the stock index or whatever, I can switch over to a NASDAQ chart as well. So let me scroll back and start from the beginning, and I want to thank you very much for watching this initial presentation. This will be recorded, and you'll have it to watch over if you'd like to by later today in the session.